India has been going through a period of low growth and high inflation for last couple of years, and several other macro challenges that we have witnessed. I think somewhere we have the genesis and high fiscal deficit post 2008 global financial crisis, and also the lack of focus on augmenting the supply side. And in this backdrop, there were a lot of expectations from Finance Minister Mr. Arun Jaitley, and also given the political mandate, the decisive political mandate he's got, there are expectations that he would revive the growth cycle, he'll bring down inflation where we have witnessed a sticky inflation over the last couple of years, and also take India firmly on the path of fiscal consolidation. If we look at the budget, he has tried to achieve all of them. He has firmly embarked on the path of fiscal consolidation by keeping the fiscal deficit for this year at 4.1% of GDP, which looks a little ambitious given the revenue projections and the expenditure. However, we believe he would have kept some cushion somewhere else and would try his best to keep the fiscal deficit target in line with the budget projections. Now, for the revival of growth, what we need to do is to get the investment cycle back on track. We cannot grow again by boosting the consumption through government expenditure, because that can result in high inflation, high current account deficit, and some of the other macro challenges that we have witnessed. And in that background, what the government or a finance minister can do is to create a climate in terms of a favorable tax regime, in terms of speedy clearances, in terms of transparent and conducive policy framework, in terms of having a redressal mechanism in case there are disputes, and an ease of doing business, attracting more FDI by having more clarity, ensuring that concerns related to retrospective taxation are put behind, and those are the things where the budget focused. The another thing he has to do is to ensure the funding is given with the constraints that I talked about earlier, and for that he announced series of measures for the foreign investors as well as the domestic investors. So withholding tax, less withholding tax on corporate bonds for foreign investors, the ability of banks to issue long-term infrastructure bonds, having a favorable tax treatment, the infrastructure investment trust, and ensuring that the domestic financial savings are channelized into productive assets. So getting more money from foreign investors in the form of FDI or the other investments, and also from the domestic investors, the savings are utilized given that the government has very limited fiscal headroom. And he talked about several areas of investment, so more roads, new airports, ports, smart cities, energy, including the renewable or non-conventional energy, using more technology in the government, national gas grid, reviving several traditional industries like handloom. I think he talked about several areas where the private sector can participate. So there are going to be lots of opportunities, and he also ensured that the funding mechanism is in place. That's where the focus of the budget has been. Now, few of the things are missing. One can talk about GST rollout, where there could have been more clarity in terms of how the government is going to roll out, because that's critical for revenue augmentation. He could have given more clarity on curtailment of subsidies, whether it's food, fuel, fertilizer, and broadly the whole government expenditure. The mindset has to move from more outlays to better outcome, and which is a measurable outcome. That's where the government's focus needs to move. The event is behind us, and markets focus may again shift back to what's happening in the global markets, to the corporate earnings season for this quarter. And also I think our focus has been on the bottom up stock picking. We have expanded our investable universe looking across market capitalization, and we believe that there are going to be lots of opportunities for a bottom up stock picker. Talking about the bond market, we believe that from a medium term perspective, given the government's firm commitment on fiscal consolidation, on augmenting the supply side, a focus on bringing down inflation, that seems to be one of the main objective of the government, and some of the recent steps to increase the food supply in the backdrop of the poor monsoon this year are very welcome. So given the government's firm commitment on those aspects and a new monetary policy framework where consumer price inflation is going to be the anchor of the monetary policy, the medium term outlook on bond market is positive. Of course, market is likely to remain range bound in the very near term given the the demand supply dynamics in the government bond market, and also some impact of the change in taxation aspect of the bond mutual funds. But overall, as I mentioned earlier, the medium term outlook is quite positive. The event is behind us. The broad outlook, as I mentioned, from the medium term perspective, both for the equity and the bond market, is positive, and we reiterate that investors must maintain the discipline of their asset allocation. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.